So good morning. It's Friday session, and I'd like to illustrate or show you guys a couple of trades that came up this morning on the Swissy, the U.S. dollar, Swiss franc, and the loonie, the U.S. dollar, Canadian dollar. Excuse me. And yeah, I made a mistake yesterday. On the Swissy. I was anxious about this trade. I knew it was gonna happen earlier than it did, but yeah, I jumped in and gave the market a few pips, a few 13, 14 pips maybe. But anyways, let me try to illustrate the trade for you guys. Um, as you can see, this is the 4-hour chart on the Swissy, sorry, the U.S. dollar Swiss franc pair, and um, as you can see right here from the left towards the right, all these very clear highs, making a resistance level, very clear resistance level. Actually, issued. Let me try to draw it for you. Issued. A consolidation for a few days. So this is more or less the top of the range. This was the bottom of the range, and first things first. All right, there you go. The market was playing this range up and down, more or less like this. So down and then up, and it tested the bottom, and then it went up, tested the top again, and then all of a sudden we had a few closes, 4-hour closes below. So this was actually a stop rate at the bottom of the range, signaling that the market was going to go up because market structure was bullish. EMAs we're signaling still a bullish market. So, anyways, the market engineered this stop rate on purpose, and you can obviously see, you know, the bullishness after this move below. And I actually called this the other day, and there was a very straightforward buy model going on in this pair. So once this level was taken out, and this is a round number level, I'm gonna jump in and I'm gonna put in or throw in the big and mid figures so you guys can see it better. Let me try to zoom in even more. So it doesn't show. Yeah, it does show. Okay, here you go. This is the 9100 level. This is this was actually the resistance level we were talking about. And once we clear this level, I was expecting this level to play support. So this level was very clear, as you can see, left of the range. This was the reason price wasn't going up. It was the 91 level was pushing the brakes on the Swissy to the high side, to the higher grounds. And I was expecting it to, whenever it was taken out, to come back and play support. And today it did. It did play support. If we pull a fib from the round number towards the top of the range, or the current range, there you go, and we go to the daily time frame. Let me zoom in. As you can see, price pierced the 79 level pierced the 79 level, but it never closed, or still, you know, today's bar, it hasn't closed yet, but it was touched yesterday. It was pierced today, and then it's going up ever since. And This trade could be played as follows. Let me drop down to the 30-minute time frame. Let me get this fib out of the way. Yeah, this guy could be played as follows. Do you see? You guys can see these very linear, very clear lows here, line over here. Let me let me delineate this for you guys so you guys can see better. Something like this. Yeah. As you can see, pretty much what happened the other day, but only on a bigger time frame, happened today again. Market was pretty much respecting this low, which is kind of a neckline for head and shoulders, if you will, but I'm not sure if it is or not. But market dropped today. Dropped today from the Asian session, and whenever London Open stepped in, there was an opportunity to buy, an obvious buy around here. So yeah, market drove price down, trying to tell, you know, market makers actually drove prices down in order for, you know, in order to grab all these stop orders that were lying below this level, this very clear level, below this blue line here, before they drove the market up. So this is how it could be played, as you can see, New York has already taken the high of the Asian session as well as the London session, and yeah, it looks like a bullish move now. I know we have some news later on during the day, but yeah, it looks interesting. So yeah, this is how this could be played. Buy during this stop rate around this level during the London Open, or even here, if you would, and then just hope for, you know, the market to go up. But it made all the sense in the world to me. So yeah, the reason I took this this buy is I took it during New York yesterday, thinking that the market was going to react more. I just didn't look at the news, and knowing that the news for today, knowing that both central banks presidents are going to be chairmen are going to be speaking today. So yeah, it was my mistake, but I hope it works out well. Let's see what happens. Hi there, folks. This is the USD Canadian dollar pair, and this is the 4-hour chart. I just switched over to the 4-hour chart, and I'm gonna try to illustrate the possible trade that could have been taken earlier on in the day during the London Open session. So this pair had a pretty similar market dynamics as to if compared to the Swissy, the US dollar Swiss franc pair. I'm gonna try to show you the range that was being played out for a few days, delineated by this blue line here. So yeah, this was basically the bottom of the range. There's an orange line, but anyways, I'm gonna do the same to the top of the range, so you guys can see more clearly what's going on. So for a few days, this pair was you know, just pretty much playing inside this consolidation, and all of a sudden it had a few closes below the low of the range, the bottom of the range, which issued for market makers to this actually was done on purpose. This is a stop rate at the bottom of the range to drive prices higher. So yeah, this was an engineered intended move by market makers in an attempt to first get these buy stop orders out of the market, and then with everybody all of a sudden thinking that you know, the market was gonna reverse and go down, take prices higher with the clear objective of, you know, taking whoever was on the other side thinking this was gonna go down. So yeah, it's funny to see how the market plays it. Let's take it to the 1 hour time frame, and as you can see, actually let me take it to the 30-minute time frame. As you can see, interesting enough, we just had Canadian news, but as you can see, this red line is the daily open. You know, I just put in this line, and then we had a kind of a Judas swing and another stop rate towards this resistance level. This is support level. Excuse me. This is a support level that comes from the H4 time frame. As you can see, it was this bottom right here, and then we had a few closes below. This was a textbook stop rate towards this level, and then and this is during the London Open. This blue line is the London Open. So we could have longed. We could have opened it long right below this support level here, and try to take out the whole daily range. As you know, we could have done it already. You know, I didn't take this trade. I obviously am out of the market, but I saw it later on. You know, I'm busy with other stuff. I'm a father, and you know, sometimes kids can take some of, you know, our time. But anyways, yeah, this is how it could be played. Let me switch over back over to the 4 hour time frame, and I'm just gonna try to illustrate also some confluences regarding this. I'm gonna pull the fib, and as you can see, I'm pulling the fib from the round. Let me zoom in so perhaps you can see it better. From the round number, the 900, 1.0900 round number. So as you can see, we pretty much had a confluence of this bottom, the H4 support level, and the 62 retracement level. So this made all the sense in the world as to you know, as far as I'm concerned, to take a long trade right over here around the 62 level, the support level. And yeah, so it's interesting what the market gives us on a daily basis. So this was the US dollar Canadian, the loonie, and yeah, a few more options for you guys, and you know, just keep it safe observing the market. I'll be back soon with another video. Thank you. Bye-bye.